Hi everyone, Donna here. I'm the owner here at Bookkeeping Made Simple. I promised you a video on capital gains. The reason I want to talk so much about capital gains is because of the proposals that are being floated around the Treasury Department right now, which is to tax unrealized capital gains. So I wanted to start off by explaining what capital gains are and what realized versus unrealized capital gains are, and why this proposal is such a spectacularly bad idea. Okay? It is absolutely guaranteed to create impoverishment in middle America. I know what they say it's going to cover. They say it's for billionaires. It's not going to be for billionaires. If you give the government an inch, they take a mile. It's just the way it is. This is not meant to be an anti-government rant. It is not meant to be anti a particular administration. This is simply the financial truth, okay? And I may get demonetized for this, but that's okay. I don't even think I am monetized. I don't know. Maybe I don't have enough subscribers for that. Maybe I don't have, I don't think I'm monetized yet. This may keep me from being monetized, who knows? So, okay, so capital gains. Let's say you buy a house. This is the biggest capital expense most people make in their lifetime. You buy a house, or maybe you buy a car, okay? But let's go with the house, and I'm gonna say you buy a house for 100 grand. Yes, I know you can't buy a house anywhere in this country for 100 grand right now, but I'm using that for easy math, okay? You buy a house for 100 grand. Let's say you buy a house for 100 grand in 2006, okay? And, or 2019, you know? And then housing values skyrocket, okay? So now your $100,000 house is worth $500,000. You have made $400,000 in capital gains, haven't you? No, you haven't. The market has not yet spoken. So your house may be worth $500,000 on paper, but the actual value of any asset is what you can actually get someone to buy it for. Okay, so you don't know what your capital gain is going to be until you sell the asset. Okay, so the government, so it's considered unrealized at this point. Unrealized, that means you don't have the cash in your hot little hand. It's unrealized. It is a mythical gain. Oh, that's all it is. It's a gain on paper. It doesn't matter what your house is worth on paper today. What matters is if you go to market, how much can you sell it for? Okay, today's housing market is on fire. It's starting to cool off a little bit, at least here in Utah, but it's been on fire because everybody that was stuck at home during 2020 is like, well, I want to move into a bigger house, or I want to move a little bit further away from the city, or I want to move to an entirely different state. People have been making these decisions for the past year and a half, and they were all really kind of coming to market now. There's actually even billboards on the freeway near where I live, and I live in Utah, that say, you know, you want to make an easy 100 grand? List your house and sell it to California for 100 over asking. So that is what your house is worth. It is not worth what the appraiser comes out and tells you. It is not worth what your property tax statement says. It is worth what you can get someone to pay hard cash for. That's it. That's it. One of the things that just drives me bananas, my boyfriend is a gearhead. He loves his car shows. He loves it, loves it. And we'll be watching these shows and they'll come on and they'll be like, yeah, this is a, I don't know, 1968 Pantera. And I want 25 grand for it. And Chris is like, oh my God, that car's not worth 25 grand. It's worth maybe 5, you know, in its current condition. Well, I'm going to buy this hulk of metal that I think I can turn into a 31 Chevy for 12 grand. And Chris goes, It's not worth 12 grand. This is all for show. Okay. So that's an example of inflated expectations, for one thing. Also an example of the value of anything is not realized until you get the cash in your hot little hand. And again, whether it's your house or it's your car or it's your intellectual property or it's something else, the actual gain that you're going to get is going to be what you could sell it for at market. Now, let's say that they managed to pass. So unrealized capital gains means somebody thinks it might be worth more, but you haven't sold it yet. So how do you know? Okay. How do you know? How do I know this piece of art sitting in my office? By the way, I'm kind of devoid of art in my office. Let's say it's a Jackson Pollock, because that's whose name kind of came to mind. Let's say it's a Michelangelo. Okay. I don't know how much that piece of art is worth until I call Christie's or another auction house, or I try to sell it. I don't know what it's worth. Okay. There's a meme on the internet that I think is really interesting, where the child is getting ready to leave home, and the father decides, I'm going to give my child this car. It's been in the garage for 30 years. And he says, go around and ask at the pawn shop, how much would they give you for this car? And they go to the pawn shop, and the pawn shop guy goes, well, you know, I'd give you maybe $2 grand for it. It's old. I don't even know if it runs. Okay. So then they go to the used car dealer and say, well, if I trade this in and buy a new car, what would you give me for it? And he goes, well, I'd give you maybe $4 grand. It doesn't seem to run, and it's really rusty, and it's really, yeah, we'd have to put a lot into it. So, you know, maybe $4 grand for it, maybe. And then the dad goes, take it to the Classic Car Club. Ask them what it's worth. And she goes down and she says, yeah, I have this car. Here are the pictures sitting in my dad's garage, and he wanted to know what it was worth. And these guys who are collectors, their faces lit up, and they went, oh my gosh, that car is worth 100 grand. I'll give you 100 grand for it right now today. So she goes back to her dad, and her dad says, basically, yeah, you have to know who your audience is. Okay. So the government is looking for money to spend on various programs. That is what they do. Government does not produce anything. They administer programs that we, the people, should have approved, but they don't produce anything. In fact, one of my favorite stories is about the Mustang Ranch outside of Las Vegas, which was a whorehouse and bar. And somehow the government got its hands on it. They couldn't even sell whiskey and sex. It went under when the government was running it. That's just not what they do. It's just not what they do. Their job is to administer, to create laws, to adjudicate law, and to administer the law. That's it. They don't produce anything. Okay, so they're looking for ways of extracting money from the population. That sounds horrible. They're saying it's only going to be applied to billionaires. So we've heard all this before. And I would venture to say their definition of billionaire is going to drop right into middle America. But let's say it's just Bill Gates and Jeff Bezos that are affected by this, or Elon Musk. Go back to the idea that the capital, the value of an asset is only what the market will pay. So let's say that they have a really good stock day. Let's say Tesla stock goes way up high. Well, this is very transient because it can drop the next day. How would Elon pay taxes on stock that he hasn't yet sold? Okay, in order to pay the taxes on the stock, because I promise you, he doesn't have any liquid assets. He doesn't have $500 billion or $250 billion sitting in a bank account somewhere. He just doesn't. It's invested in his company. So he's a trillionaire, he's a billionaire on paper. Okay, just like many of the people I know are millionaires on paper. They're a millionaire because they bought their house, they held it for a long time. The value of the house has gone up, but they haven't sold the house. So we don't actually know what it's worth because it's worth what it's sold for. So I know my parents are not wealthy. They happen to have some land. They have a home. I know what the value of that is in today's, what it's sitting at today. I know what it's been appraised for. And I know that if illiquid assets or illiquid capital gains, unrealized capital gains were to be taxed today, they would lose everything. Okay. That's the way it is. Many people are the same way. Jeff Bezos does not have billions of dollars sitting in the bank. He has billions of dollars sitting in unrealized capital gains in the value of his stock. If he has to sell that stock to pay the taxes on the unrealized capital gains, his whole business will go under eventually. Okay, I have, you have to stop and remember, in order for you to pay taxes on capital gains that you haven't received yet, which goes so far against the tax code, it's unreal. You can buy and hold an asset as long as you want and never pay taxes on it until you sell it, for the exact reason I've been talking about in this video. Okay. I see it all the time in advertisements on Facebook Marketplace because Utah is very cheap. People are very cheap here. It's not a bad thing, but that's the way they are. So they'll say, well, I bought it at IKEA for this much. And I'm thinking, well, I don't care. Because it doesn't matter what you bought it at IKEA for, or what you paid for it at RC Willey for. What matters is what I'm willing to give you, or what you're willing to get out of it, or what someone else is willing to give you for it. That's the value of it. Not what you paid at the retail store, but the amount that I'm willing to pay for it today is what it's valued at. So the Jackson Pollock painting that does not exist in my office, I could have bought it for $250. Maybe I happen to know a friend who's an artist, and I buy their painting for a couple $100 to give them some help. Okay. And I hang it up or I hide it, put it in storage in it. But I hold on to it. And then after they died, or after many years have passed, I find out that, oh, this painting is now worth $2.5 million. Okay. The capital gain on that painting does not exist till I sell it. So basically what Janet Yellen is proposing, which I've also heard proposed in California, is to tax you on money you have not earned, based on an appraisal that has no basis in reality. So again, I want to kind of really go into the capital gain. You buy something, you buy your house, you hold on to your house. After a while, you sell it for more than you paid for it. The difference is your capital gain. Okay. There's a lot of loopholes to this, by the way. Okay, so don't take this video to your tax preparer and say, well, Donna said. This is just a very broad overview. And this is why this one particular policy is a bad, bad, bad idea. The tax code has always been written in such a way to help those who own businesses be able to benefit from their labor. Okay? So the worst thing you can be, as far as the tax code is concerned, is a single wage earner. Single, not married, no kids, wage earner. So you paid on a W-2. It's the worst thing you can be for taxes. If you want to improve your wealth, let me know. I've got friends that can help you with that. I'm very much hoping that this unrealized capital gains tax idea goes the way of the dinosaurs. I hope it's a bad, horrible, bad idea all the way around. So that's it for today. Welcome to my primer on capital gains. Thanks very much, and talk to you soon.